Okay. We are live with another episode of the Tech Behind FinTech. Extremely excited today for my guest, Bryan Young. Really excited for another episode. So once again, this is a Tech Behind FinTech where we talk about emerging technologies in the fintech industry and also disruptive companies. So today, let me introduce Bryan Young. Bryan Young is the CEO and co-founder of Home Lending Pal. Home Lending Pal is an anonymous marketplace that uses its AI-powered mortgage advisor, machine learning, and blockchain to help first-time home buyers and lenders through the home research and underwriting process. Bryan, welcome to the show.
Pleasure to be here. Thanks for having me.
Oh man, it's really exciting. I think we're gonna have a lot of fun. Today's topic is how an AI mortgage advisor helps for first-time home buyers. So we're going to dive into it. Those familiar with our show already know once we start the show, we talk about the news of the week. So we choose out some really interesting or articles that we found interesting. We go through it, we get our guest opinion on it, and then we get into the main topic. So the first topic of that we want to discuss: Bitcoin blows past 48,000 to hit another record high as major financial firms warm to crypto. BNY Mellon, America's oldest bank and a major custody provider, said on Thursday that it would begin financing Bitcoin and other cryptocurrencies. The company will eventually allow crypto assets to pass through the same financial network currently uses for more traditional holdings like U.S. Treasury bonds and equity. I want to read a quote and we're going to get Bryan's opinion. BNY Mellon is proud to be the first global bank to announce plans to provide an integrated service for digital assets. Roman Rugman, CEO of Asset Services. Bryan, what are your thoughts?
I think it makes sense. I think when you look at, not where the world is, but where it's going, especially post-COVID, you're going to see the adoption of cryptocurrencies and digital currencies a lot more. If you think about it right now, you go outside, you're wearing a mask. If anyone coughs next to you, you're pretty much freaking out. And I don't think that's going to change anytime soon. So it makes sense that, digital currencies are going to continue to grow and scale. And I think, banking systems, users, you saw Tesla, they bought like 1.5 billion worth of Bitcoin as well.
Yeah.
You're going to continue to see companies try to adopt that into their processes and procedures. I think one of the tough parts is, how do you manage the high growth and even sometimes downfall of a crypto? But I think it's the same as with everything else, with any other stock, but it'll be interesting. I think, if we're able to tie that part into, we're not looking at that now, but if we're able to tie that into what we're building on blockchain, I think that could be a very interesting prospect to be able to buy a home using Bitcoin. So it would be very interesting.
You know what? A couple of years ago, I think back in 2017, there's actually a purchase of a home using crypto. I have to pull the exact news article, but I definitely remember that a few years ago, back when it spiked up during 2017.
Yeah, I know they've done it in China and Russia. Those are really two big use cases in which the entire process was done digitally. And yeah, I would love to see about the US-based version as well.
It's definitely interesting to where the world is going with that and how we can adopt it. Like Bitcoin always say, man, missed the boat on that one. They say it's not too late, but it's so funny because at 17, it was like, oh, wow, that's too high. Now at 48, it's like, oh, goodness. 17 was like a dream ago.
Right.
So definitely interesting. The next article I want to get into kind of related. So the Central Bank of Nigeria, my country place, has called on banks across the country to cease servicing or facilitating payments for cryptocurrency exchanges. I just learned this today. Nigeria is one of the world's largest users of virtual currencies, pointing to the sheer impact of the crypto-wide bank account. Now, it's important to mention in this article, not saying that the use of crypto is no longer, they're going to suspend it. And the central bank wants to clarify the CBN has not said don't use crypto. Instead, what the CBN has said is that you are not allowed to use the Nigerian banking system for Nigerian payments. So I think this happened last Friday. So a lot of fintechs have been scrambling to basically find other banks to partner with. which is not an easy task per se, because these partnerships do take some time. What are your thoughts on that, Bryan?
Yeah, I mean, I think if you dive deeper into that particular scenario, their reasoning behind it was because it was being used as a conduit for money laundering and other illegal activities. And I think that's something that we're going to continue to see. I mean, how do you manage a decentralized system is a question that a lot of people want to know. And I think that was their biggest struggle. But it does show that with everything, there's a good and there's pros and cons. And I think, for us to at least know that this is a potential con, now it becomes the important imperative for other entrepreneurs like myself to think of, positive workarounds, ways to alleviate those pain points for individuals.
Yeah, I mean, when you start going into the dark web and it was a process called Silk Road, where you can basically acquire anything illegal, including literally putting hits on people using it. It's one of those things where even fiat currency, can be used for illicit purposes. So to your point, how do you track it? I mean, obviously it starts getting a little bit more convoluted when you go to a decentralized place. I mean, when you start managing it on your exchanges, you could track it for tax purposes. Right. Outside of that hardware, it's a lot easier for people to transport it and use it for different purposes. So those are the articles that I wanted to cover today. Now, the topic which I really, really want to get into, because I've been curious since I read about home lending, PAL, and what you're doing. Before we dive into the AI aspect and different things, can you give me a background of the company?
Yeah. So, Stephen Better and I, my co-founder, we originally started this company in 2017. And it took us about 2.5 years working with Equifax just to get through the industry regulatory compliances to be able to access your personal credit information. But in that process, the ultimate goal, when you look back at the subprime mortgage crisis of 2008, 2009, you saw that, and not say that all banks are bad, because they're not, but the banking executives that made those decisions based off of greed, they profited over $640 billion. More than 4.4 million people lost their homes. And the people that made those decisions basically just received a slap on the hand. There was no jail time. There was no kind of negative impact on the people that were the greedy ones that were making that. They were originating loans to people that couldn't afford them. And if you fast forward to where we are today, we're told that regulation and things like that have changed. And that's not to say that they haven't. They definitely have. But you also have to understand that, for the millennial market, for the younger demographic, we're moving into a day and age where understanding where my data is, who has access to my data, and what is my data being leveraged for is becoming more and more important. And it just doesn't make sense that buying a home is one of the largest purchases that you'll make, usually for most people in their lifetime, but it's one of the most convoluted, cumbersome processes ever. You don't really get to see, am I truly getting something I can afford? And not to say that everyone's bad, but the people that are in the process aren't your financial fiduciary. And what I mean by that is that if you think about the home buying process, everyone that is involved has some type of financial incentive that they receive from helping you in that process. So again, if you get partnered with a very good realtor or a very good lender, then you're really taken care of. But out of everyone out there, we can't assume that everyone is really good at lending or really good at being a realtor and really cares about your own financial well-being. So when we built the process, the company, we really just wanted to have a way for people to ensure that from a financial perspective, I'm not being taken advantage of. And we did so by showing more transparency around the data. The data APIs allow us to do that now. So, and COVID has really shown that, it's something that's necessary.
No, I mean, that's an interesting thing. I mean, although I'm heavily in technology for my career, I do know something about the real estate industry. Like back in 2003, I've been a licensed realtor. I just did it for my own investment purposes and close my own deals. But to add to what you're saying, there have been deals that I have gotten into that when you look at the paperwork, you're like, whoa, why am I paying this amount of points on this deal? Right. And sometimes it's not necessarily communicated to you, but it's in the matter of fact, there was a deal recently, right? Verbally, everything was okay. And then my partner and I got a contract for the details with the loan. I was like, wait, why is this an arm? Why are you doing this? You didn't mention that when we were talking.
Right.
Oh, okay, yeah, we okay. And then all of a sudden, like a couple of days later, we got a new contract. So it was like, okay, that's
Right.
kind of strange. So if I didn't catch that, what would have happened?
Right.
So let's kind of dive into that. Like how do you solve that on your application?
I think we're solving it by leveraging artificial intelligence and machine learning. When you look at the standard documentation, the standard papers that are necessary for underwriting a loan, you can scan those utilizing, optimal character recognition software or OCR technology. So, if you've ever gone to your ATM after hours and scanned the check to deposit into your account, it's basically the same technology there. But leveraging that to be able to identify areas of concerns, areas of risk, for the borrower that you caught it, fortunately, but someone that isn't as experienced within the real estate home buying process may not catch that. And even on my own side, with my mom, when we bought her house, back in 2004, 2005, we had an adjustable rate mortgage, and it started out the first year was really good. Second year was really good too, but by year three, when the rate switched, and now you're looking at going into the subprime, crisis as well. It became something that we just could not afford. And that time we had another company, so trying to do both. So the idea isn't to prevent people from getting certain type of mortgages or even getting certain type of loans. Is to ensure that from a borrower's perspective, you understand what you're getting yourselves into, and if that is avoiding a predatory lending potential scenario or identifying redlining, then our goal is to be a consumer advocate and help the consumers understand what they're committing themselves to financially before signing that that dotted line is really the goal for us.
No, I mean that's interesting. So as you talk about it, it's full transparency. Like I said, technology is my heart, but I could have a dual resume with real estate alone, just from an investing standpoint, for being in the industry and also keeping my license active. So and that's what I mean. And we didn't talk about this before, my background in that, but now as you're talking and going through the deals we've done, I see how at times you really, if you don't have like a lawyer per se, but most times you're not using a lawyer for the mortgage applications. You're doing that with your broker or whatever, but you're not going through that legal rigmarole from an individual buyer perspective. Not talking about if you're getting commercial properties and things of that nature.
Yeah.
So the transparency aspect, and as you talk, I'm like, yeah, it's definitely beneficial. So from a user perspective, how does that work? I put all my information in. Like
Yeah.
you said, I could, yep, sorry.
So from a user perspective, you're going in. So you come to Home Lending Pal, you create an account. That probably takes about 15 minutes. But again, our artificial intelligence is starting, after we relaunch, it's starting from the very beginning, kind of explaining why we're utilizing blockchain, why you're connecting to your bank accounts, why you're authorizing a soft FICO pull. And that's really important. When you look at other options, other solutions that are on the market, they are allowing you to see your Vantage score. Lenders are utilizing or leveraging your FICO score to underwrite your mortgage loan. Now, you might say, well, what is the difference? The difference could be anywhere from $30,000 to $40,000 more in the loan over the lifetime of that loan, if there's a big point differential between the two. So the first part, again, is about helping you understand what the lender is going to see in the process for homes that you're actually interested in. So now you've added a home that you're interested in. You're looking at it. You're trying to compare. Do I want to live in the city versus suburbs? So now you're looking at two homes from a financial perspective to truly understand, can I afford one or the other? And as you're going through that process, the system is saying, okay, well, why don't you upload your W-2s or allow us to pull in your recent tax statements? And the idea is that as you're in a non-intrusive and a non-sales way, as you're going through your research process, we are collecting the documents that are necessary for underwriting, but then giving you a better understanding of not only your likelihood for approval, but areas of concern that would happen with an underwriting process, such as, bankruptcies or foreclosures that would prevent you from moving forward. Are there late payments that would cause your interest rate to be higher or raise concerns from a underwriter's perspective? We're really just trying to help you identify areas that will become more of an issue as you get deeper in the process before you spend this time falling in love with this house and only to realize that you don't qualify for it. And then as you're ready to apply, we then let you self-select which lenders you want to talk to based on your likelihood for approval. So, you could talk to one lender, you could talk to 10. You could only focus on lenders that you have above a 9% chance of being approved with, or you could go to your current lender who you might only have a 40% chance. I mean, it's really up to you as the borrower. But again, the main point, the main focus is that we want you to be aware of what you're getting yourself into. And you talk about kind of that signing process. It's a really exciting moment. But when you go into an office of a lender or a realtor or anyone, and you're presented with 200 pieces of documentation to sign to be able to close on your home loan, there's no way that as a human you're going to read through all of that word by word. But artificial intelligence allows that to happen instantly. So
I'm laughing because I've totally blanked out on this just signing ridiculously.
Right.
I've been with the deals that we've done. I've seen that. So we have a comment. We always like to show our comments from the audience. Jack Baylor, we've seen huge steps in using AI to automate previously annoying, complicated things, such as automatically challenging parking tickets, etc., that have been massively successful. However, we've also seen major issues in AI taking on their programmers' unrecognized implicit biases, including racism, discrimination against lower income earners. What steps do you think the wider AI community needs to do to remove this issue and prevent this causing even more redlining without people realizing it?
Yeah, I absolutely agree, Jack. I think, when it comes to tech within the real estate space, I've often said that, you can't build new tech on top of old discriminatory processes. One of the first things that we did when we started building this system is reaching out to the Consumer Financial Protection Bureau to get more data around your HMDA data and your RESPA data. We really want to understand, how are people being discriminated against. And I believe when we talk about our use of blockchain, we are built on the IBM Hyperledger Fabric, and we're anonymizing the data. So even though we are comparing, the lender's lending criteria against yours, you're still an anonymous lead to them. They don't actually get your information until you self-select that you're ready to talk to them. And even then, you're able to pick and choose which information is shown. Because honestly, at the end of the day, they don't really need to know your race to be able to underwrite a loan for you. So that's kind of one of the ways that we're starting that process, and then we're working with bigger regulatory individuals or groups to try to help expand that and to bring that into a better fruition for us.
No, that's interesting. That you mentioned it. I mean, sometimes with these systems, it's you take on, as Jack mentioned, a programmer's bias and different things of that nature, and that's something we actually discussed in school last semester. So that's interesting that you brought that up. So, I mean, the biggest thing from your perspective is the anonymizing everything. So it sounds like, and correct me if I'm wrong, just to summarize, it sounds like the user owns the data. Now they're presenting it to these different entities and banks for loans, but they're anonymized in a sense. So the end business, the end bank doesn't actually, they just know, okay, here are the stats. But in terms of ethnicity, in terms of anything like that, that's not known to the bank. Is that accurate?
Yeah, that's the initial kind of plan, the initial focus for us. We still have I won't try to make it seem as if everything regulatory has been approved there, but that's our initial kind of, I guess, theory is that by doing so, it will kind of alleviate some of those biases that happen, especially human biases in the process. If I see your name or your race or even your age or sexual orientation, I might discriminate against you because of that. I think to go further into that, by us willingly, openly allowing other organizations, the Consumer Financial Protection Bureau, and even more to come in and say, help us audit this, help us understand, where we are good, where we're making our shortfalls, and kind of having that open process, that open dialogue, I think will make it a lot better for all. And I think one of the beauties of blockchain, and the reason that I really kind of lean towards it wasn't necessarily, I mean, for document management, document security, there's any system that can do that. But that audit trail that it will leave behind that will allow us to kind of follow that should help when it comes to that discriminatory lending, predatory lending practices that we're trying to alleviate in the long run.
No, and now that you brought up blockchain, especially using Hyperledger Fabric, we actually had a show on that a couple of weeks ago, heavily involved in some professional organization, Cloud Security Alliance, and we have a blockchain working group. And we're looking at security, especially in the financial side of it, with smart contracts. Hyperledger Fabric, along with Quantum and Ethereum, is three of the systems that we're basically looking at for that. A couple of questions about that. What made you go with Hyperledger Fabric as opposed to other blockchain networks?
Yeah, so back in 2009, we were actually selected as one of 15 companies globally to be involved with the IBM HyperTech Accelerator. And so we were originally a part of that accelerator. Their focus was on our consumers' data security and protection. So IBM is still, to this day, leading our data security and protection efforts. But as we kind of grew and expanded our relationship, we then, started integrating Watson into our artificial intelligence. And eventually, as we were thinking, as COVID hit, the aha moment for us was that, not to say that retail mortgages are dead, because they're not. People are still going to go into your lending institutions, your banks, and request a mortgage. However, you will need a better digital format for people to leverage. And we felt that blockchain, specifically Hyperledger, just because that's what IBM is already offering, made the most sense for us, because we had a trusted partner there. They're our advisor. They're helping us with the architecture in terms of build out and scale. And I would say it was probably more because of that in terms of decision of Hyperledger versus Ethereum. But now that we are on Hyperledger, I think the support they've given us as well, just to scale it and manage it a lot better.
No, so that's good. So is it when you use the Hyperledger with the other banks involved, are they connected to it? So you have some sort of consortium with your partners, and then Hyperledger is that central focus?
Yeah. So, for us, if you think of it as we often compare it to a train system. You have the tracks, which would be the Hyperledger Fabric that we're operating on. The stations would be, Home Lending Power would be the station. Of course, we would be where you started. But then other companies, other organizations within the process. So you have for example, Fannie Mae for the lender would be a station or a peer node. You have Fannie Mae that would have their own peer node or station. You would have, just a bunch of different vendors that are involved in the process. And then the actual user, what we call our help token, which is the user security token, is the train itself. So as the train leaves from the HLP station to the lender station, then on to the Fannie Mae or underwriting station, the borrower themselves are still able to see exactly where their train is within this home buying process. But that was really kind of why we built it out like that, is because others could come in, add peers to our network, and still service the lender and create that transparency around their data and the decision-making process for the borrower is really the ultimate goal there.
That's awesome. Your use case is definitely nice use case. Like literally had conversations around this on Tuesday. Do you have any plans with implementing anything around smart contracts to that mix, or are you currently leveraging the smart contract technology within your Hyperledger Fabric?
No, so the smart contracts, I think, going back to Jack's earlier statement, I think that is really the critical point when it comes to understanding how discriminatory practices are happening, really happens from leveraging the smart contracts. You can pull a lot of the data, relatively speaking, back from the smart contracts, but that really automates that process for you, which allows us to one, leverage the AI to ensure that the borrower isn't being taken advantage of. But then two, you're not sitting there trying to read 200-300 pages worth of paper or documentation. Instead, you're executing the smart contracts, and the AI is really protecting the borrower and hopefully making the process happen faster. And in our private beta, we found that when it's executed properly, it could decrease the time of close by up to 60% in this process.
That's pretty cool. And just for the audience, like when we talk about smart contracts, it's literally a contract, but it's programmed and it lives on a blockchain and it's executed on the blockchain. It's just the good thing about it, it could happen autonomously. So you have the contract there on the Hyperledger, what Bryan just talked about, but then you program prior to it, inflows, outflows. Something's going to happen. It's going to, I guess, connect to some external oracle that Homeland and PAL has, and then an action will happen. And this is all happening automatically. So it's almost like a legal contract from an application standpoint that is ongoing without user interaction once it's put on. So that's just to give some background and what we're talking about. Nah, man, fascinating stuff. So, it's interesting because you hit like the trifecta and like all cool technologies being used right now, right? You talked about blockchain, you talked about AI. I mean, it was like chatbots also. How are you using chatbots?
Yeah, I mean, we're hitting the cool points, but we're executing on them too. And I talk about, doing small things well. And our ultimate vision for the chatbot is more so to be a way for borrowers to ask questions without feeling embarrassed or pressured into a decision at the time of that question. So again, we're leveraging Watson and IBM technology to expand our chatbot features. But when you think about it from a millennial perspective, most millennials want to operate either from their computer, from their phone, from their laptop or iPad. We're not necessarily a group of individuals that enjoy having conversations on the phone or going in person. And that was even before COVID. Now we're seeing with COVID, it's even worse for us. So the idea of integrating a chatbot into the system for us, it has to be. I won't say that we've completely built it out completely finished our vision of what we want Kev to be, but it has to be more than just a glorified frequently asked questions section. We have to have a system, an artificial intelligence that can scan your profile, understand your personal standing in terms of finance and credit, and then make a recommendation from our database on items that would actually benefit you, not just generalized material that does not give you any additional value as a potential home buyer. So again, we have a lot of work to do there. There's a lot of work left, but that is the ultimate goal. Is that I'm a big Iron Man fan. If we could make Kev more like Jarvis, that would be awesome. But the big thing is just for small questions, saving you the embarrassment of feeling like you should know this and you don't.
That's awesome. And just so the audience know, like Kev is Home Lending Pal's rational agent. So that is the name of the AI that you're interacting with. So that's pretty cool. Wow, man, look, it's interesting. When do you go live, or are you live right now? What's the situation with that?
So we're currently in a public beta. And the reason that we closed, we oversubscribed our seed round on December 31st of last year. We raised about $900,000.
Congratulations. Have to always say, like, anytime someone says they completed a seed round, before we even continue, congratulations. That's big.
We'll have to raise more, but, it's a very good first start for us. We've always left. So we started a private beta back in May of last year. We then moved to our public beta back in June or July, and we're still in public now.
Can you give some clarity for the audience, the differences between your private beta, public beta, going live, just the nuance, the differences between that?
So private beta, we personally invited, we're in Alpha Labs with IBM, and we invited about 300 to 500 people to come in and actually test the system for us. For a private beta, it has to be someone I won't say but it's a very closed group, a very close focus group. And their entire intent is to tell us, one, do they like it? Two, are our projections worth their time? Does it make sense? And that went really well. Out of those 500 people, 86% of them said, hey, if you guys fix these small bugs and really address, informing us of how you're protecting our personal data, we would leverage this tool, this technology. So that gave us what we needed to move forward to a public beta. A public beta is what you see now, that you can go to homelendingpal.com. You can sign up and go through the sign up process. However, there may be bugs, there may be issues, and the entire purpose is for you to get what you need in terms of the feedback, but then also provide us feedback into what is wrong. Where do we need to make adjustments? And as our users are actively doing that, we are actively usually on a weekly cadence, making updates to adjust those bugs and address those issues that you're having until you eventually come to a finalized, or I would say commercial-ready product. A commercial-ready product is really what you would expect from like your Salesforces of the world, your bigger players that have been around for a while. That it's expected to be a perfect experience. Now, why would we do a public beta? Why would we raise money and instead of closing it back down, allow a public beta to continue to happen? our biggest thing, we talk about how marketplaces are built. We are a marketplace that connects a borrower to a lender. Most marketplaces focus on who pays them. In our scenario, the lender is who pays us. However, the borrower is who utilizes our software, our technology, our tools. In many cases, the reasons that you don't like most marketplaces is because they get so focused on their customer, they forget about the user experience. And one of the things that we felt that had to be changed, again, like I mentioned before, you can't expect change by building new tech on old principles. So one of the reasons that we have allowed our public beta to continue to happen is because we're literally getting feedback from potential borrowers that are leveraging our system on things that they want to see, items that they would like us to implement, areas that they would like us to improve. And because of that, that's why we've been able to scale and grow our platform with that understanding to our users that your data is completely safe. We have bank level security right now. However, if things are off, we want you to tell us about it. If there's ideas that you have, like, last week we had a married couple that also wants to accept a gift and they want to be able to do a cosigner. That is a very different experience, but we're building that into our process so that the next person that has that can do that as well. So that's why you do public and private betas, and that's why we've decided to keep ours public until we are fully ready, which should right now we're on track to have that happen around March or April of this year.
No, thanks for that background and explanation. I'm sure it's helpful to our audience. I definitely love the approach and how you described it. It's also like methodologies, like they have books like the Lean Startup based on Kaizen and Toyota's principles for manufacturing, and it sounds like you're taking a lot of those same principles and incorporating it into Home Lending Pal and your development and how you're rolling things out. So that's definitely interesting.
Yeah.
Look, like I said, once I read about your company, I introduced myself, and I'm very interested. I like how you're leveraging the technology. I've learned some stuff today. How can our users find you? How can they connect with Home Lending Pal?
Right now, you can go to homelendingpal.com and create a profile with us. Well, of course, read and ensure you know what you're getting yourself into, but then also create a profile. We are also creating a white labeling licensing option in which you can go to your bank and request for them to basically connect to our system. And once they do so, they can refer you to the platform, and it will also do the same to ensure that even with their own internal products, that you aren't, being taken advantage of in terms of predatory lending or redlining in that capacity as well. So that feature should be also released here in April. And those are our two ways right now. We'll be releasing our mobile app. It's actually, my team told me it was ready today, but we're going to take a step back and do a little bit more security compliance testing just to ensure that everything is safe there. But that should be released. Hopefully, the mobile app should be available on the iPhone and Android market. I'll say April as well, just to be on the safe side. But it is ready now.
That's awesome. And if people wanted to get in touch with you directly, how can they do that?
Yeah, you can find me on LinkedIn. I forget my LinkedIn handle, but Bryan Young. I'm also on Instagram at Bryan Young HLP. Or you can go to homelendingpal.com and send a message to our contact us form, and it usually gets routed to myself from my team. And we would love to hear from you. Hello at Home Lending Pal as well is an easier way to probably send a message and get it to me.
Hey, last question I just thought about. And should I, like, if a person wants to become a user of Home Lending Pal, is the time to do it only when they're about to buy a house, or should they do it prior? Like, I just thought about that question right now. Like, when's the right time to become a user to Home Lending Pal?
Good question. We have built the system in a way that will allow both people that are ready to buy right now a chance to connect to the best quality lender for them, but then also those individuals that are really early in the process. Our ideal customer is someone that is very early in the process. They're just thinking, should I buy a home or should I not buy a home? And really what we want to do, if you think about the classic scenario outside of should I live in the city versus suburbs, is, someone will say, oh, well, I want to be a homeowner within the next 2 years. And that's a very hypothetical statement. You really don't know if that's even possible. So we really want you to create an account at that time, and then our system will basically analyze your finances, your credit, based on homes that you're actually interested in buying, and give you a more realistic expectation of the timeline that it's going to take in terms of days to become a homeowner for that type of home.
That's interesting. And wow, as you talk, I'm like having more questions. I know it's about to close up, but we're 6 minutes past, and I know you're busy, extremely busy. One more question: do you help investors? Obviously we're talking about home buyers, but what about people that are buying investment properties?
So,
I know someone in particular.
Yeah, that is a question for us. So again, the beauty of a public beta is that you're able to get questions like that. Investment properties, refinancing are both two areas that we have gotten a lot of interest for, because our system right now is more so focused for new purchases. But refinances and investment properties is something that we have gotten a lot of interest for. I will say, to be on the safe side, those are probably features that we won't be able to roll out until Q3, Q4 of this year. But it is on our product roadmap to be able to show how investment properties or how you can, one, purchase the investment properties, but then two, from an affordability standpoint, still afford to have an investment property alongside your current living expenses as well.
Pretty awesome. I know a couple of realtors that I'm going to reach out to and make an introduction. I think can definitely benefit from your service. Bryan, thank you very much for being a guest and educating us on what Home Lending Pal is, and also the industry in general. There's a lot of stuff that in your conversation explanation, I kind of learned some stuff. So I always like to do that. The biggest secret is sometimes this podcast is really me. I'm extremely curious, and I just have an opportunity to ask all the questions that I want, and everyone else gets to hear it. So I really thank you for being a guest today. It was a really great combo.
That's wonderful. Thanks for having me.
All right, listen, you have a great weekend. To our audience who tuned in, thank you very much for the comments, like from Jack. Thank you very much for listening and commenting. We really appreciate that. We're on YouTube and LinkedIn. On YouTube, you can subscribe to our Tech Behind FinTech channel to be updated every week at 12 p.m. We have a show. Hopefully, I can see Bryan being a returning guest as they roll out. I'll be interested to see how the commercial product went from public beta to commercial. That'll be an interesting conversation. And yeah, man, you take care. And once again, congratulations. I'm really excited for your move.
Thank you.
Cheers.
Have a good one.